As our trend following predicted, markets down big time today. S&P 500 down 3.11%. The Qs, the NASDAQ 100 down 4.58%. I so hope you jumped into those practice trades. We see 20-year bonds up 0.75%. Gold up about 0.25%, just like we were hoping. Okay, you're listening to Charting Wealth's daily review for Thursday, the 25th of October. Let's jump into these exciting charts going into our third week of strong down movement. Remember, we had a weekly vertical crossover back on the 12th of October. Price movement well below on that weekly chart. The 2-day and the weekly trend lines, derivative oscillator gaining huge downward momentum. Price percent oscillator spiking over, going down. Now again, we're just 3 days into a 5-day candle, so we have more to draw, more of the week to go. We'll see how things end up. We're starting the first day of the latest 2-day candle on our 2-day chart. Price percent oscillators crunched over, going down. Derivative oscillators still losing a little bit of downward momentum. Price movement well below, again, the 2-day chart. And we see a strong red down candle growing with a decent wick on the bottom. Again, these are Heiken Ashi candlesticks. We look at that 4-hour chart. What do we see? Well, of course, we had that weekly vertical crossover going down. That occurred in the morning. So our jumping in point was in the afternoon. And again, I do hesitate to find the actual jumping in point at noon. When you look at Heiken Ashi candlesticks, just a little background, they give you the open, high, low, and last. That would be the close. And again, it's measured completely different from your typical candlestick. We do have a great training on it. I'll attach that to the end of today's program, so those of you who haven't taken it can. Approaching about 100,000 people who have taken that training. It's a great video, so please listen to it. Jumping in point somewhere around 273, and of course the low throughout the day, 264.70. So again, incredible range of movement in just a day and a half. The magic of the weekly vertical crossover after a pullback on the 4-hour and jumping in at the appropriate time. So a very positive move, particularly throughout the day. I don't know if any of you all pulled the plug at the bottom of that movement. Maybe you took a nice chunk of change on a virtual trade, but hopefully it didn't pull out too soon. We see the derivative oscillator gaining downward momentum, price percent oscillator. Now, again, this is what psychology typically is, to take your profit as quick as you can and to hold on to losses. Don't be one of those fools or someone who acts foolishly. Again, follow the charts, not the noise. Okay, let's move away from the S&P 500 where things have looked so beautiful, and we go to QQQ. That is the NASDAQ 100. And again, these are inverse trades. Those of you who are new to all this, we are not talking about jumping into a losing position on the S&P or on the NASDAQ 100, but getting into inverse trades such as SH, which is a ProShares inverse fund on the S&P 500, and something like PSQ, which is an inverse fund on the NASDAQ 100. It goes up. In fact, I can show you that very quickly. We put in PSQ. That is the ProShares short. And of course, what does it do? Bingo! It moves up while the NASDAQ moves down. So that's what we're talking about. A great training I'll put again at the end of today's program on inverse funds. So I'm going to have both inverse funds and the Heiken Ashi candlesticks. We'll come up with one more throughout the course of today's program. So what do we see happening on that weekly chart? Strong down movement going into the third week. Price percent oscillator kicking over. Derivative oscillator gaining downward momentum. We go to the 2-day chart. Of course, another strong candle starting to form. Hasn't finished forming yet. All price movements below the 2-day and the weekly. Spiking over, going down of the price percent oscillator. And it's nice to see the derivative oscillators hanging in there, not losing momentum, which we always want to, we don't want to see it moving in the opposite direction. And what do we see? It spiked over, started moving over in the afternoon. And of course, we had that jumping in point. We had an attempted crossover, of course, back on the morning of Tuesday. And again, I told you that if you were in that trade and you had pulled the trigger, don't get upset. Again, everything was moving in our direction. That was fine. If you had jumped in, again, if you had jumped in somewhere around the 172 mark, again, at the end, somewhere throughout the day, down as much as all the way to 165.04. So again, on our Heiken Ashi candlesticks, and again, give me the caveat of not being an accurate way to call where all that movement was because it is measured differently, but somewhere in there, nothing to fret. That's why you have to use the charts, trust the charts, and let the charts lead you. This is not a guessing game. This is not gambling. This is listening to the charts and not the noise. That's why we never discuss news. Do you notice that? We never talk about news here. Why? Because news doesn't matter. It's usually out there as like enemy propaganda. So don't listen to it. Listen to the charts. Watch the charts. Pay attention to things that matter. And that's why keeping yourself a trader's journal like we sell is so important. But you don't even have to buy it. Just look in the show notes. You'll see PDFs where you can download for free copies of the trade worksheet, the daily market worksheet, and the weekly market worksheet. Going on to TLT, what do we see happening there? Well, of course, we had, what is that, 5, 6 weeks of strong down movement. The last 2 weeks, we see TLT sliding sideways. Up the prior week, a green spinning top right now, derivative oscillator losing momentum, price percent oscillator going flat on TLT. We look at the 2-day chart. It's trying its best to cross over, hasn't quite done it. This is just the first day of the latest one. We can't call a candle or a crossover until that candle finishes forming, and that won't happen on a 2-day candle until the second day, which is tomorrow at the end of the market on Thursday. But price movement has moved past and through the 2-day. Now again, that's a warning bell when your trend lines start to be broken and approaching the weekly trend line. People always say, hey Tom, when do I get out of a trade? How do I make those calls? First and foremost, it is your experience. You cannot simply write a whole set of rules and those are what you always obey. That's why we keep saying you have to practice with us every day. 10 minutes or so is all we ask. And if you do that, and if you will keep a trader's journal, particularly that weekly, if you just want to start doing the weekly, the weekly worksheet, do that. And then every time you do a practice trade, fill that out. And then you'll be making notes and knowing what it is that actually matters, what really matters on the TLT over time. You'll learn it, you'll figure it out. Okay, and that's why also you need to practice on specific ETFs or stocks. And remember, what we teach here applies to stocks just as well as ETFs. We just do broad ETFs so you get a big feel and we don't have to worry about particular things affecting it, like earnings reports and those kind of things. We don't have to keep up with those when we're dealing specifically with things like broad indexes, bonds, and gold. That's the reason. It just makes it easier to learn. Okay, so what have we seen happen? Of course, we've had that bounce over going up in the morning back on Tuesday, and of course things taking off going up on bonds. Do we have a trade on bonds? No, we don't, because we still have confirmed down moves on the weekly and the 2-day. Now, if we see, as we've been saying, things cross back over going down before the 2-day crosses over going up, then by all means jump into a down move on bonds. But we may have found a bottom on bonds. Don't know that yet. We'll let the charts tell us. Okay, lastly, we go to gold, and it's beautiful gold weekly vertical crossover going up back on the week ending the 5th of October. And we've had up movement ever since. And we see, again, price movement is above that weekly trend line. And as we go from the weekly to the 2-day, what do we see there? Well, we see a need to redraw our trend line at this point, not so we get the result that we want, but because we do have a trend that is developing, not at the same crazy angle it originally spiked up to. Derivative oscillator losing a little bit of momentum, price percent oscillator still heading up at about the same mark. And we go from there to, and look, we still don't have a jumping in point on gold because it popped up big on the morning of the 23rd and then drug sideways. Has it maxed out and peaked? It may have until we get the the 4-hour vertical crossover going up in the same direction as the 2-day and the weekly. We don't get in. Is it coming? Perhaps so. The derivative oscillator is continuing to lose downward momentum. Keep your eye on gold. Keep your eye on it as we continue to move through the week. Our Heiken Ashi candlesticks are weak in gold. Folks, that's where we are as we end the day. Thank you so much for being with us. We're going to include instructions on how to use the daily market worksheet, as well as Heiken Ashi candlesticks, and of course inverse funds, how to make money when markets crash, which is what we saw happening throughout the course of the day. Don't mean there's a black Wednesday or anything, just mean strong down moves and how to capitalize on those in your virtual trades. My friends, remember, we are not a stock calling service. We're an education firm. I want you to practice with us. We're not giving market advice. God bless. All the best from the whole team here at Charting Wealth World Headquarters. Buy our book if you want to support us. You'll see a link there also. God bless.